Ethereum thing, another stream marker, so I can find it easier. Big me, right. Hi friends, Ethereum, fantastic, driving the prices all the way up, plus 2k. We've actually managed to make it up to a nice profit-taking zone off the back of a pattern that we had in the prices recently. Are we done with it though? Could we move on further up? Are there more targets on up above? How much percent could we be looking at to get again here with the next stage in our Ethereum price expansion development? And is it all going to be unicorns and rainbows? Let's just see what the critical zones are for maintaining this upward trajectory. Thanks so much for joining me. Likes, subs really do help and all that good stuff. Here's the intro clips. Rocky.outcrop, technical analysis, brought to you by me, that guy, Rocky.outcrop, with the technical analysis. So what was I talking about just there? If I hide off my whole list there, it makes a bit more real estate on the screen. So hide all of this. In this period of consolidation here, there was a triangle that could have been drawn on the charts by some people, lunatics out there like ourselves. And then, of course, the prices managed to move up the way, taking out key horizontal levels along the way. Key horizontal Fibonacci levels, if you like, and key horizontal market structure previous price action levels along the way. Doing a wonderful job here of pushing on up the Donchian channels, for example, and staying above the 50% zone every time we had a retrace here on the 4-hour time frame. Wonderful, wonderful to see it. And we made it as high as this area, having taken out our previous all-time highs that we set on the 20th of February. And we've seen since then that the prices have actually struggled a little bit, putting in this sort of double top area just now in the here and now. Are we looking at perhaps a degree of consolidation? Could we have profit taking occurring here? And actually, yes, we do have profit taking occurring here, because of course we had this this measured move of this triangle, the green triangle, if you like, and then we've come up towards where Bulkowski, in his old pattern book, encyclopedia of patterns, would say is, of course, the likely area for you to be finding taking profit at. Good enough move there. So if you've then moved on beyond the sort of the built-in risk management aspect, if you like, of trading patterns as described in Bulkowski's book, and you're looking towards the next targets, what actually are they? And we can see the 1414 Fibonacci and the 1618 up there between this space of sort of 2353 and 2500, and the measured move of the pattern taking us up towards 2400. Shall we just call it 2400 and we'll go splits on it? Yeah, let's just go meet you halfway. We'll call it 2400 as our next target there. Now that's jolly good and everything. What are we looking to see happen? Well, first off, of course, what we're looking at is trading at a range up the way in this Donchian channels. Now, this is just essentially described in any number of ways, really. You know, you're looking to kind of maintain that upward sort of trajectory there of this line, for example, or indeed you could pop on another indicator if you're not a fan of the old DC, perhaps the Bollinger Bands, and say we want to stay above this middle line overall here in the sort of the general grander scheme of things. Or, of course, if you're not a fan of that, you could pop on another allegory for the very same thing. Well, the basis line of the Bollinger Band, of course, is the 20 simple period moving average. So you could just kind of say to yourself, well, how about we take that 200 and we take a 0 off the end of it, and we say, let's try and stay above this white dotted line overall, essentially movements towards the top side, taking out previous highs here, with extensions moving up the way towards those targets indeed. But of course, you know, after inflections, we're looking up the way and saying that it's not surprising to see on movements up the way the guts of 10% being expressed, you know. So we're looking for hopefully to get the guts of 10% with any potential move up the way towards the top side. If we do go on up, now that's going to be good for us as well, because if we do actually pull back down towards the sort of 20 simple and we're looking up towards 10%, well, then it takes us up towards that 1414, that 2350, and again, nice easy trading to be had along the way if you're like sort of looking to try and manage your positions in amongst this zone. Now, of course, what I mean by managing really at the minute is, can we stay above that red horizontal line there, the $2,000 area? But let's, you know, we could easily wick down just to sort of to $2,000. Let's call it, generally speaking, that things start to get a bit sketchy just coming up towards the $2,000 area. where we'll find the lower end of the Bollinger Band in the 4-hour time frame, etc., especially over the next wee while. So what could we be doing just here? Well, this could be consolidation, a typical phase where we see that of course, big accounts of taking profit on a position that has happened since down here and moved towards the top side. Lovely. Then, of course, they've retested various averages and found them to be okay, and we're moving up the way since. Okay, so that's good. Maybe there is a degree of sort of continuation perhaps for the sort of the larger accounts that yet again want to extend on up the way, but we're still yet to see if this retest that we had here on the of this downwards descending triangle is sufficient, right? If it's not sufficient, then actually, I'm not going to get too carried away of looking at the downward sloping diagonal line here, but I am going to acknowledge the previous sort of range more or less, and perhaps move this up the way just a little bit to come into around about this zone where we had the roughly where the yoke would be across your back if this was a shoulder and a head and a shoulder, etc., in around about those shoulders there, and looking at the 236 and here at 1861 and saying these would be your best buy zones between 1861 and down to sort of the 1800 area. If we do get a subsequent retrace, movements down towards this zone start to really suck, because you're going past this whole head and shoulders liquidity area as well. You're taking that out. Pop the VPVR real quick. Where's the VPVR hiding? Here. You can see, so like movements down past this zone suck, obviously, right? Is that good enough? Was this an episode? Yeah, this is an episode. That's great. That means I get to say like, subscribe, tune in for the channel. Again, really appreciate the support. And of course, if this is filmed during a live stream, so join me for a live stream. You get to ask questions after we discuss the price action. This is designed to integrate well with whatever you're looking at. So hopefully I've not stood on the toes and I just clarified your own trading positions. If you want direct feedback, etc., join me for a live stream someday, and the Discord and the Patreon and all that.